All right, guys, what's going on? This is Carlos, CEO of G.A.R Capital. Thank you so much for joining me today. A little earlier than usual. Obviously, I'm actually heading out to go eat a little early as I'm in Orlando today. So again, have the desk online. Team is working hard. Still, nothing changes. Rocking and rolling. I usually do this at 5 p.m. Eastern Standard Time, but here we are. It is 4:17. Let's get started. The Dow closed down today 653 points. Nasdaq fell 4.29%. The S&P down 3.2%. The VIX up 15%, 34.75. Not yet above 35. Got close, but we didn't get there. Equal weight S&P performed better than the regular S&P, down about 2.97%. Small caps were hit, down 4.21%. My IWM puts did print today. I had the ones I had for the unusual options activity. I tweeted about that way back. I'll go ahead and retweet it for you guys later on when I find it. But yeah, it was some strong volume on those IWMs. I posted about it as well regarding that. I was actually down on that thing for a little bit. And I think I was down at one point like 45%. But the analysis, again, the trend was down. I was glad that we bought some time with that. And it actually worked out. And then we hit IWM again. I closed it maybe a little too early. I thought we were going to get a little bit of a bounce as we were getting right near that 4,000 level. I thought we were going to get that bounce. We fell. But again, I held a runner. It went as high as around 64%. I do think we're going to bounce here. Honestly, looking at it here, could be again 90% decliners versus advancers on the NYSE. That's usually a tell sign of a little bit of a panic. But the VIX is not telling you that today. That's the only deal. In regards to that, I think we haven't hit full capitulation yet. Again, I'm kind of reading some statistics here. This is on the stock market. Only 17.3% of stocks are above the 200-day moving average. That's not good at all. How about new highs? 55 new highs, new lows, 31.35. So again, very bearish. I mean, you can just look at the actual heat map. It looks absolutely terrible out there. So have we hit capitulation yet? Not exactly. I'm going to go over some of that levels with you. Let me go over the rest of the day. Bonds were bid today, TLT. I own some TLT. I get a nice little yield out of it, but I think bonds may have bottomed. So I'm long TLT there, up 0.88%. Gold and silver down today. Again, nowhere to hide as commodities were absolutely crushed with this China stuff. So again, the market's kind of pricing in a recession as commodities are going down, but we're still in a high inflation environment. So again, that's one way to do it, get commodity prices lower. So maybe a bull case is kind of hitting here, maybe. I mean, that's some positive, but I wouldn't hang my hat on it. We need something. And I wrote a note earlier today for the actual live market block. And here's what I wrote. So I'll go ahead and read it to you here. And you could see here, if I see bonds continue to bid here, watch TLT, and commodities can cool a bit, watch crude. It becomes an attractive scenario for the bottom, possibly being in or a short-term sustained bounce. I have to see that CPI number, like I said here. Wednesday is very, very important. That's at 8:30 in the morning before we can jump to any kind of conclusions of any kind of bottom. But a cooling inflation read would be great for the bulls. Again, commodities are showing, again, not a ton of a pullback. I looked at a chart earlier today of the Bloomberg Commodity Index, and it looks like it was breaking down of an ascending triangle. So again, maybe some short-term pain for commodities, gold, silver. Yes, Bitcoin's a commodity if you want to price it that way, again, against dollars, and of course, crude oil. So again, we could get a little bit of a pullback on these metals and also crude oil and gas. So again, the macro environment to be a bear market here, to continue this bear, you need everything to continue to be a mess. Russia, China, inflation, you name it, everything, right? We just need things to be the status quo. But for a short squeeze for the bulls or any kind of pop, we just need to hit something. We need to get something. Just get one thing. We need a positive CPI print. We need a ceasefire in Russia and Ukraine. We need China to get out of lockdown. We need some supply chains to open up. We need something positive to kind of boost that idea of possibly a bottom. Taking a look here at crude oil down 6.5%. Gasoline down 3.67%. So crude is testing maybe near that $100 level. I was calling for around 90.85 during the summer. I think we do roll over on crude oil. Granted, I believe that I think the Saudis are selling cheaper oil now, or what have you. I read an interesting headline on that on Twitter. Taking a look here at euro dollar, up 16 pips against the dollar. Dollar yen down 34 pips. So Japanese bond buying or Japanese yen buying bet more than the dollar. Taking a look at put call spreads, put call ratios up 11%, We're getting a lot of pushing into some puts. The problem is that they're getting very expensive. We're buying insurance contracts on a burning house. Not the easiest thing in the world to do, but if you do it right, it obviously pays dividends if the direction is correctly predicted. I want to take a look here at this chart. This is the S&P chart with drawdowns. Very important to see. So let me expand this here. And I think if hopefully it's not too compressed, you can see that the high was 478.49, which is right around where the S&P peaked, right around 4,800, 47.80 or so. So we're taking a look now. We're at 397.94, right? Right now, your next level down, guys. If we were going to go ahead and kind of get back to where we were, let's say 2018 in terms of drawdown, again, 20%, right around 19.64%. That was the drawdown from the peak in around October to when the Fed raised rates in that winter of 2018. I remember it very vividly because I was trading that day in December when they raised it, and the market went absolutely ballistic. We bounced sharply, obviously. Do I see any kind of analog that kind of matches that? Other than the Fed thing, that's really the only thing I can think of it. But looking at it here, the next really big level here for SPY guys is 382.80. That's a 20% drawdown from peak. And that would consider you in a bear market. Now, is that plausible? Absolutely. Very plausible. Again, it would match 2018 and it would also match 2011. Again, those are the last two times, or I believe 2011, yep. 2011 is, I think it was 2011. That's correct, 2011. So 2011, 2018, obviously 2020 being, I'll count that as a COVID panic. And then now we have nearing a bear market. So kind of every so often we do have those, obviously being 2011, 7 years, 2018, and now if we get there, that'd be another 4 years. So again, it's not inconceivable that we'll get that 20% drop to 382.20. Would I go ahead and rush at anything to buy here? I did buy some stocks today. So it's not like I didn't buy anything. I did buy some stocks. I did buy utilities, a dividend ETF. So again, that's something that just out of my dividend port every month. I still buy crypto every week. Nothing has really changed there, but I'm definitely going to work on my shopping list. I haven't had a chance to. So again, I need to start looking at PE ratios, seeing what's cheap out there. What's there for some value that I can go ahead and buy? Definitely want to put some capital to work here as everyone's very pessimistic. Kind of getting that vibe of March 2020 when everyone was extremely pessimistic and freaking out, and that's where we were. So taking a look at the downside for the S&P to answer some questions here. Let's take a look here at S&P futures. We'll go ahead and pull this up. Let's go ahead and bring up a 3-week chart. Now, this is something I did tell the bloggers, was that right at 40.41 S&P futures. On the weekly, that's your 100-day moving average. Granted, we're still in the weekly candle, guys. So again, I think we get above that. That'd be very nice if we did. But really 40 points by Friday, could that definitely happen? Absolutely. That'll stay us above that 100-day moving average. Now, in terms of Fibonacci levels, what is the next bottom? 36.64. Now, if we did the actual setup where we had the S&P 20% fall, that's our about 3,828. So that'll put us right around here. Let's call it here. 38.25. I think it seems about right. That's where SPY is. That's where SPY would be for a bear market. Right there, about 38.25 or 382.80 on S&P. So there's your, I can't say bottom level, but that's definitely a level to watch. Can you take a look at VLO and CNQ? Sure, let's take a look. VLO is Valero Energy Company. Okay, let's go and take a look at the daily. Again, you've had some really great numbers here. So best entry level if I wanted to buy some energy stocks here on the daily. Right here, this base breakout, if we can recapture that, 85.29 to 87, that wouldn't be a bad idea. But we would need crude to fall a little more. So I think the 50-day moving average, or about 100, is a pretty prudent level to go for in terms of VLO. In terms of CNQ, this is Canadian Natural. I'm assuming this is natural gas or some kind of energy company. You have the 100-day moving average on the daily, a little more sharper of a downturn. That seems to be a pretty decent level to target if you kind of want to ease into it. Or you could just make it simple and just buy an energy ETF as well, instead of just picking individual ones. Again, that's really up to you and what you prefer. In terms of the dollar index, We do have 103.70 currently. Let's kind of expand this out a little bit to a 5-year breakout. Let's go to a 20-year. I mean, pretty much name it. 20 years, I still can't get anything. Here we go. So we haven't seen levels like this since right around 2002. Really next target level, if we were going to go higher on the dollar, would be 111.49. I don't think we get there, but I could be wrong. Absolutely. The dollar, again, if we have higher inflation, it's just interesting that, again, everyone talks about inflation in the United States. You're not the only country that has that. At least we're the best house in a bad neighborhood, if you want to kind of put that mentally in your mind. Let's go to Microsoft. Microsoft was asking, Ben was asking about Microsoft. And I actually had a good question for my team. I said, you have $10,000, you can only buy one stock, and you have to hold it for at least a year. And my first pick in my mind was Microsoft, actually. I love this company. I really do. They had great earnings. In regards to an entry, I like the 200-day. 260 is where I wrote it. That's where I'm looking to buy. I think I've read their numbers. They're an exceptional company, a well-ran company. I mean, if it goes down a little more, I don't know if it gets down below 200. I'll probably add more there. We'd be a lot lower, but 260, I definitely want to add a position on Microsoft. I do love me some Microsoft. All right, guys, I'm going to go ahead and leave it there. Have a great rest of your afternoon. I will catch you guys tomorrow for the morning note. Let's see how Asia opens up in terms of futures. I thought I saw a bounce here on the hourly. So we did have a short-term bounce. Looks like it was just faded. So again, still around 39.91 to 4,000. Let's see how we do. Do you think inflation can get worse? Do we have a near peak? CPI will tell us on Wednesday. That's for sure. Have a good one, guys. Cheers.